Now on Overnights,
I believe in reason and common sense.
Leith Van Onselen from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
How are you, buddy?
Yeah, good, thanks, Phil. How about yourself?
I'm okay. Australia, the housing bubble, the economy. It's all one big bubble waiting to burst. Would that be fair to say?
Yeah, not so much ready to burst, but we certainly do have an oversized housing market in Australia that is just dwarfs the size of the economy.
Yep.
And, the upshot of this is that according to the Australian Bureau of Statistics, we're all rich, Phil.
Oh, yeah.
And I tell you why we're rich, because the Australian Bureau of Statistics released data on Australia's housing stock. So what they did was they basically, every quarter, they released data valuing the total value of our housing across the entire country. Mm-hmm. And we received the March quarter data. And what it said is that Australia's total housing stock, so if you think about every single home in the country, whether it's in rural or Sydney or wherever, like every single home in the country is valued at just under $11.4 trillion.
Right.
So as of the March quarter. Mm-hmm. And that equates to, when you divide it by the number of homes, that's an average of just over $1 million per dwelling. So, just over $1 million. And so, if you base it on that, we're all rich, Phil.
Yeah, fantastic. Yeah, unfortunately, we don't all own houses, or those of us that do are never going to pay them off.
Yeah. So I'm being a bit facetious here. So we've got about 11.3 or just over 11.3 million houses in Australia, and they're obviously valued at 11.3 trillion. So divided by just over a million each. Yeah. But as a proportion of the economy, Australia's housing was valued at about just over 4.1 times the size of the Australian economy. Now that is absolutely gigantic. Yeah. By world standards, it's more than Canada, the UK, and most other places in the world. And just to put it into comparison, in the United States, their entire housing stock is valued at only 1.6 times the US economy. So ours is valued at 4.14 times our economy, mm-hmm. double what it was in the 90s, versus the US is only 1.6. So we have this ginormous, massive housing market. And if you divide the total value of the housing stock by the population, it's worth just under $400,000 per person.
Right.
And once you adjust for inflation, it's tripled over the past 30 years. Now, this surge in average home prices to about just over $1 million has notionally made us some of the wealthiest people on earth. So according to the UBS Global Wealth Report, for example, Australian households rank second in the world on net wealth. However, I'd argue, Phil, that just because we've got expensive houses, we're actually better off. And it's actually this housing addiction this country has mm-hmm. is actually choking the economy. And the reason for that, there's a few reasons for it. First of all, our households are carrying some of the world's highest debt loads. So our household debts compared to our income and our economy are among the very highest in the world. And we've also seen a massive amount of, dollars and lending and capital pour into our housing market, so mostly into existing homes, pushing up the price of housing. And as a result, the entire banking system in Australia has basically been transformed into, what's called a massive building society, in that they focus primarily on home lending, so lending for housing rather than lending to businesses and that sort of thing. And obviously lending to businesses is what grows the economy. It's what actually creates things. Whereas if you just lend to housing to push up the price of housing, you're not actually doing anything productive. And just to put some numbers around that, in 1990, roughly 2/3 of bank lending in Australia was for businesses, with mortgages only accounting for around a quarter, and the rest was for personal lending. Yeah. Whereas, you fast forward to today, and that ratio is completely flipped around. So over 2/3 of bank lending is now for housing, and barely 1/3 for businesses. So we've completely refigured the Australian economy to be around the housing market. And another useful, interesting statistic is if you look at the Australian Securities Exchange, so the share market, 5 of the 10 most valuable companies on the ASX, so half of the 10 most valuable, are all banks. So they're ANZ, CBA, National Australia Bank, Westpac and Macquarie. And they obviously lend primarily to housing. So our entire share market is also, in effect, geared towards the housing market as well. Now, if you compare that to the US, as I said before, the US's housing market's valued only 1.6 times their economy. Yep. Americans don't speculate in housing like we do. They don't, housing isn't such a big asset over there. You know, they invest mostly in financial assets like shares, etc. So the US share market, while 5 of the top 10 companies on the ASX in Australia are banks, in the US, the top 7 positions are all tech companies. So, you know, and productivity growth is booming in the US, whereas it's obviously stagnant in Australia. So, you know, the fact of the matter is having this expensive housing market, having everyone indebted to housing and channeling so much money into the housing market, I argue is a bad thing. And, you know, if you think about it from a productivity perspective, who's going to take a risk and try and start a business?
Yeah.
When you have to pay off a mega mortgage. So if you're just like a heavily indebted family, or, you know, a couple, whatever, paying off a gigantic loan in Sydney, for example, well, you can't afford to take the risk to try and go, you know what, I'm going to try and start a business, because you're basically chained to your mortgage. And that has a massive productivity impact. And, you know, I'd argue that us Australians would be so much better off if we never had this massive surge in house prices. And house prices were, you know, half the level that they are now, even though we'd be notionally a lot less wealthy, according to the, you know, these global wealth reports.
Yep.
We'd actually be more wealthy in effect, because we wouldn't be struggling under the weight of debt. We wouldn't be carrying these massive mortgages, and we'd have more money to spend in other things. And we'd have, you know, the economy would be more balanced, because banks would be lending more to businesses, that sort of thing, rather than just channeling funds into housing, which is non-productive. And we'd just be a more balanced economy. And, you know, the sad thing about it is, despite being the second wealthiest households, we've actually got heaps of Australians who are actually struggling financially. So, you know, obviously the cost of living crisis is a real thing. But according to CoreLogic, or they're now called Cotality, which is a major housing data provider in Australia, they showed that currently Australians are spending near record amounts of money on their mortgages and on rents as well. So, you know, and the housing affordability is at an all-time low, effectively. So we've got the second most wealthy households in the country, but a whole generation can't afford to actually house themselves, which to me is kind of a bit counterintuitive. I mean, surely if we're so wealthy, we should have a citizenry that can actually house themselves. And, you know, I'd argue if the average home value was worth $500,000 instead of $1 million, and households were carrying, you know, debt that was valued at 90% of income instead of 180%, which is what it is currently, we'd be such a better society. Yeah. And we'd be, in effect, actually wealthier. And, you know, I mentioned before that when in the early 90s, when banks lent mostly to businesses and house prices were, you know, half what they are now as a proportion of the economy, the home ownership rate in 1991, for example, was 5% higher than it is today. And homes cost 3 times incomes versus 8 times income on average today. And household debt in 1990 was 70% of income rather than 180% of income. So, you know, really, when you think about it, households were far wealthier in 1991 when we had cheap housing than they are today with super expensive housing, even though we're supposedly the second wealthiest households in the world. Now, the disturbing thing about this, Phil, is that the situation's actually going to get worse, because obviously the Reserve Bank of Australia is cutting interest rates now. And, you know, we've already had 2 rate cuts this year, and, you know, most economists and the financial markets think we're going to get another 3 rate cuts by the end of the year, which means mortgage rates are going to come down. That's obviously going to put upward pressure on house prices, because historically, whenever interest rates are cut, you get a rise in house prices, and typically they rise by double-digit percentage after a series of rate cuts. So that's just going to push up the price of housing more. But even worse, during the election, the Albanese Labor government committed to some policies which are just going to drive up the cost of housing even more. It's going to pump more money into the housing market. So, you know, the main policy here was that the Albanese government committed to allowing all first home buyers to purchase a property with a 5% deposit. And effectively what they said is that from 1 January 2026, so next year, the government is going to guarantee 15% of all first home buyer mortgages. So what that means is that at the moment, if you're a first home buyer, you need to come up with a 20% deposit if you want to buy a home. And if you don't have a 20% deposit, you've got to buy a lender's mortgage insurance, which costs about $20,000. It's quite expensive. Right. So as a result, it's limited the number of people who can get into the market, because they've got to save a deposit. But when they take out a mortgage, they borrow, you know, 80% of the property price. What the Albanese government said is, no, we'll let you get in with a 5% deposit, taxpayers will guarantee 15% of your loan. Therefore, banks won't require that lender's mortgage insurance. And all it means is that people who currently can't get into the housing market, can't afford to buy, will be able to. It means that those who can afford to buy will be able to pay even more for their homes because they'll have more to spend because they won't need as big a deposit. And ultimately, what we're going to end up with, Phil, is we're going to end up with higher house prices because you have more people chasing the same number of homes, and they're going to be borrowing more to do so. And we're going to have households carrying even more debt because they're going to have less deposit to bring when they buy a house. So ultimately, we're going to be back to square one. We're going to have, worse affordability. If you look 5 years down the track, when all these people have come in buying with 5% deposits, ultimately they're going to have to come up with a similar deposit they would have had to currently, but the prices will just be a whole lot higher, and they'll be carrying more mortgage debt for longer, and we're going to have a more expensive housing market. So unfortunately, this situation whereby housing's worth just over $1 million per home is going to get worse because prices are going to keep rising because of low interest rates and these sorts of these sorts of policies like the 5% deposit policy from Labor. And we're just going to end up with an even more unbalanced economy, more household debt, and more expensive housing. It's a pretty grim situation.
Where can people go to find out more information about this common sense, my friend?
Yeah, they can go to macrobusiness.com.au.